In this video we will discuss why we believe Clearfield is a strong buy. We will go over a lot of things that will help its business do well in the coming years, and discuss why the assumptions made in the previous video should be reasonable. If you haven't seen that video yet, make sure to check it out. We will go over each point rather quickly and suggest to do some follow-up research on the points you find interesting. The following points all contribute to high demand and therefore our first assumption. Clearfield offers fiber solutions. The first thing to know is that 5G coverage requires a lot more fiber than previous generations. Also, there is a large underserved and unserved market which Clearfield is targeting. Furthermore, Clearfield solutions are easy to install, reducing labor time up to 50%. There are multiple government subsidy packages aiming at broadband deployment totaling some $100 billion. Finally, Clearfield is branching out to Europe with its Nesta Cables acquisition. The next points contribute to our second assumption, because they all help expanding their production levels. Firstly, Clearfield has tripled its manufacturing footprint in Mexico in 2022. At the same time they doubled their distribution capabilities in Minnesota. This means they can start producing and delivering more products to satisfy the current backlog and increasing demand. Through Nesta Cables they vertically integrated their production line. This means they are less subject to supply line issues. The other points all relate to profitability. They support our assumption of a slightly higher net profit margin. Combining their operations in Finland and Mexico might lead to additional cost savings. However, expanding their facilities and acquiring Nesta Cables has led to one-time increased costs. This means they had a smaller profit margin than would otherwise be expected. Future earnings should therefore be higher than might be expected from recent reports. The fair value of its Nesta acquisition may be up to $145 million, while only paying $21 million. Furthermore, the company has a long history of growing profitability. However, they have raised more cash recently. Because they are very profitable, we do not consider this a bad sign. This will actually help them growing in the future. It also decreases the likelihood they will need to raise cash again in the near future. So that takes away a risk. As a consequence, the stock price has recently dropped almost 50% from its high in November. Therefore, the current price gives a good entry point. The fair value of the stock is about $130. This is a 90% upside from its current level. The company has consistently beaten expectations in the past years. They beat both their own guidance and analysts' expectations. This usually results in a large gain on their quarterly earnings date, which is due next week. Therefore, we expect Clearfield to do very well, both in the short term and long term. That concludes this video. We hope you enjoyed it. Thanks for watching.